Good morning, everybody. This is Dan Huss with AlgoDayTrader.com. It is 5 minutes to the U.S. Open, and this is your European session recap. Let's begin with the S&P 500. The resistance level we ran into yesterday and continue to run into is drawn from our 31.75 highs to lows. It's considered the next in the series, measured move short. Let's look at this on a 4-hour chart to see exactly what I mean. So from our 1468 highs to the 93 lows, there was a full halfway back short at 1430 half. The market traded down to and through targets. Upon reaching the secondary target and breaking through the lower bounds target, the anchor to lows drawn from our 93 to lows, the new extension, never saw participation, nor did it ever go to its target, so it never actually traded. Therefore, we never began a series of extension shorts. What we've ran into was the 61.8 line of the full long for 2012. It has been defended, and right now our line in the sand is a 13.9675, which is the 61.8 line of the next in the series short drawn from a 31.75 to lows. We ran into to the pip or tick yesterday the 85.75s, and that is the short level. We got quite a reaction off it overnight. We went down to a 78 low overnight, and we have an 84.25 gap fill today. Odds for gap fills on Tuesdays are 67% of the gaps fill, and I want to make everyone aware and remind everyone that we have a 57 open gap below us, which is below the 61.8 line of the of our full halfway back long. So this short trades, we trade down to a 57 to fill the gap. We will then be looking for a short off of this high in the direction to take us down and through lows to 13.18s. I want to point out that the full halfway back on a daily time frame, in other words, the full halfway back long since the last time we traded our weekly extension, which is from a 1068 low to our 1468 highs, resides down at a 1268, a perfect 200 points between the levels. We could potentially fall down to that level and do so very quickly. I don't want to assume that's what's about to happen, but if we look at our prior pullbacks, they have, particularly the ones last August and this time of year last year, in theory we may actually be coming up on a close of that. This might be a defense of the 61.8 line, and we may go to 15, 09 to 1510 from here. That is a distinct possibility. But a pullback all the way into 1268 can't be ruled out. And that's just the inside, that's just a traditional inside this extension. In other words, it's the traditional that would take us to the targets for this extension. Okay? And that's at 1268. It's way down there. Let's I'm more worried about what are we doing right here, the next 10 to 20 points before then. So we have an open gap though at the 1357s. We'll see. Gaps fill. I mean, it could take 2 months. It could take 2 days. It could fill today, but gaps fill. Okay. Maybe we trade down. We fill the gap. It's a retest of the 64s, and then we bounce back up from there. In doing so, maybe risk appetite in the currencies comes off then, and we can fill our longs in the currencies that are desperately needed to fill in order to get, begin our daily trends. So far the euro off of its lows here is, oops, here we go, there we go. So far the euro off of its lows has been unable to trade any long or hold any long. It has traded up into now a front run of 11 of the 2840 short, a very similar short level. Let's look at that from pretty much the exact same idea here, is that we traded a full short off the high. That short went to and through targets. The extensions never traded. They got participation but never traded to target. Next full in the series comes in at a 28.40. Okay, so I am looking for resistance there. It looks like it potentially is coming in on the euro, right about there. And then I am still looking for the push down to 126 to get long the euro for, and what to me will be a swing trade, potentially for the rest of 2012 and into 2013. Whoops. Okay. Sorry, we are firing a new system, a crude system there, to a demo account right now. Just testing execution. Sorry for that pop-up. One of the things we always do before you ever fire anything to a live account, we obviously look at the back test to make sure that the back test is, makes everything as mechanically makes sense, and then we need to analyze how the back test results align with firing to a demo account to to assure that we've accounted for everything in the back test for live firing, because the mechanics of how a system behaves in live price action is not the same as the mechanics and even the coding that you need to develop for a back tested for a system to be back tested on. It's very different. There's the bell. So we are pulling into this halfway back long on the Aussie. We traded a short into this level. It was a front run of 4 at the 95s. You can make a case that that was a next in the series short as well. Nevertheless, let's see how things hold up in this full halfway back. This ambush long, right? Because we broke a short off the high, and then we traded into the full long here. So let's see how this long holds up. Could very well, break, and everything could turn over here. But the pound. Remember, we put this level on watch yesterday. It's a traditional after an extension, which means if this level holds, we would have brand new extension shorts. If this trade does trade down to its 57.80 targets, 57.70 targets, which actually happens to be the full halfway back long off of 52 low to the new 63.10 high. So we're looking for something to trade. The pound has been in no man's land inside of a very 1,000 pip range. It has been inside of no man's land. I have not touched the pound in almost. I mean, we've been taking a few trades on it, but for the most part, I have been trading the euro and the Aussie almost exclusively over the last year for this reason, is we know it's in no man's land and it's just been mucking about. So, gold is still finding. Go out to a 4-hour chart. Still finding resistance at the full halfway back short. Still finding support at the full long. It's just a battle over these two levels. The long traded first, however, so we are looking for it to continue on to its targets, and that's about it for gold. Not much else to say, to be perfectly honest. You draw an extension up here that may take us up through new highs, but for the most part, the levels on gold were to be a 735 seller at first touch, or a 1702 75 1703 buyer at first touch. Anything inside of that is danger. So it looks like we're opening up, bank down, tick down, waiting for our breadth numbers to come in, but overall, I would say we're looking for from here sideways to down price action. It looks like we've come into a pretty strong resistance level. Now the question is, does this resistance level hold? Are we able to trade down into better longs in our currencies? And will this be the start of a trend and the reversal point that we've been looking for so frivolously over the last few months? We've been waiting for this time of year, for this time, to set up. The only trades I'm willing to put on in a day like today are big daily swings like the euro dollar at 126, or even this week because of holiday trading. So because those big levels, they'll be defended. They'll get participation, but it's the micros and other things that don't, that become unsafe in times like these. So have a great day, everybody, and we'll be back with you as price action develops.